Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's video, we're going to look at the short-term and the long-term picture with Bitcoin. Quite a lot of people are panicking out there because of the price fall in Bitcoin in the recent weeks. What we're going to do is we're going to just take a calm and relaxed and unemotional look at Bitcoin in the short term and the long term and tell you exactly what the picture is. I'll also have a look at the Ethereum chart and show you exactly why I think that Ethereum is about to take off against Bitcoin. But before I start, the usual disclaimer, please remember every video that I do is only for educational purposes only. Nothing in the video should be taken as financial advice. Please do your wider research before making any investment decisions. So with that out of the way, let's get cracking. We're going to start off with Bitcoin on the weekly chart and look at the two critical lines for the next few days and possibly a couple of weeks. The blue line is the 13 EMA, the 13 exponential moving average. And the yellow line is the 21 weekly exponential moving average. The reason why these two lines are critical is because once we get a close below the blue line, the 13 EMA, the next line seems to historically be the 21 weekly exponential moving average. The reason why this happens is because of the historical chart patterns of what's happened in the past with Bitcoin. If I show you in the history what this has happened in the last bull market over here, this is where the Bitcoin bull market started back in 2016. And as we went up in this bull market, you can see quite clearly the blue line here holds very strongly most of the time there. However, as soon as we break below this line, as we can see there, the next strong support line is the 21 weekly exponential moving average. Generally, it will hold the 13 EMA, but once it pierces through, but if we have a close below it, like here, we tend to find a close support there. So the bodies of the candles must hold support on the 21 weekly. Yes, they can wick down, as you can see here, quite closely. However, we will generally find the body of the candle close above the 21 weekly exponential moving average. Same here, once we broke the 13 MA, we found support on the 21 weekly. Here again, as you can see, we found support on the 13, we didn't break through, and even here we went down to the 21 weekly, but we held off. There was no body of the candle on the 21 weekly exponential moving average. So this is where the historical context comes in with Bitcoin. So if we look at the current picture here with Bitcoin, these two lines have played a significant role even when we started this current bull market here. When we actually broke the blue line, the 13 EMA, we went to pierce through the 21 weekly EMA on 2 and 3 occasions here, there. So what does this mean for the current price? We are currently here. We have now pierced through the 13 EMA. It'll be Sunday evening tonight when we'll know whether this candle has closed below the 13 EMA. If it has, the chances are, the probability is very, very high that we're going to get down to this level here, which is now currently at 44,800. So keep your eye on these two lines for the next couple of days. And we haven't hit the 21 weekly exponential moving average since October back here. This is the candle on 21st of September was the last time we hit the 21 weekly exponential moving average. So it's now 7 months since we hit this indicator. And this is the longest time the Bitcoin has ever gone without hitting the 21 weekly exponential moving average. So it's long overdue. And the probability of it hitting it this time is very, very high. So brace yourself for a fall to the 44,000. The question then is, will we find support at this level? And again, the probability is very high that we will find support. Yes, the price can wick down below this price level, but the body of the candle will more than likely be above these levels here, above the 44,000. The question is, why are we falling down and having this massive correction here? If you've been watching many of my last few videos, you'll know that I've been giving you some resistance points. Nobody in the YouTube community seems to be looking at these major resistance points. And the first major resistance point that I gave you was the Fibonacci retracement from the all-time previous high here down to the recent low that we had down here, December 2018. And as I mentioned before, if you look at the Fibonacci retracement level, the 3 times 61.8 here, and I've drawn this many times in the past few videos, so if you want to check them all out, they're all there, that this was the first resistance point I gave you of $64,000. What I didn't know was that the extent and the depth of this correction that we're getting here. So only time will tell how far this will come back. My guess is the 21 weekly exponential moving average will prove the support line this time around. What's interesting actually is if you look at where is found support currently at the 61.8 times 2 level here. So it may well be that we bounce from these levels, but the greater probability is that the 21 weekly exponential moving average at the 44,000 level will come into play this time around. If you want to support the channel, then please click on any of my videos, and then below the videos you'll find a box called Show More, which gives you a description box, and in that description box is the affiliate link with Etoro that I have. So I partner up with Etoro because that's the main exchange I use for all my investments. These are the reasons why I tend to use Etoro. It's a very simple exchange to use in terms of depositing money and withdrawing the money, as well as trading if that's what you want to do, as well as for long-term investing, which is what I tend to do. So if you want to support the channel, please click on the partnership link, and then what you'll do is you'll get this box here, and then you can basically put your username, email and password and just fill in the form there. If you like any of my videos and you find value in them, then please don't forget to like and subscribe to the channel. The other two resistance points that I gave you was the Bitcoin log growth curves over here at this point, which has now reached a level of 69,000. So when we do recover from this correction that we've just had now in the last few weeks, and the chances are, the probability is that we're going to have a certain amount of resistance at this level, which currently is at around the 69,000 level. And when we finally come back up to these levels again in the next few weeks, possibly a couple of months, then you'll find that this line obviously is an ascending line. So therefore it's going to be much higher. So the longer we take, the higher the amount of the Bitcoin log growth curve will be at this level here. So let's wait and see. So that's the next resistance point we're going to come to. There are two other ones. The main one after this one will be the Bitcoin Investor Tool line, which is currently at 80,000. So this line here is currently at 80,000. So should we get past the log growth curve resistance point, then this will be the next line here. Currently this is at $80,000. And obviously again it's an ascending line, so it's getting higher and higher and higher as we get into the parabolic end phase of the current bull market. And the granddaddy of them all is this trend line here, which is going to provide resistance up here in the current bull market. It's very clear for anybody who understands charts that when you have such strong support here, and as soon as the support breaks down, we get a massive fall here, and then very strong resistance here. It's quite clear that this line is going to play a significant and very important role for the price of Bitcoin when it gets to anywhere around these levels here. I'm not quite sure why. I've not seen these with any of the other YouTubers. They seem to be all hyping up all sorts of trades and taking people up in the emotional sense. But really, here at Wisdom Bites, you've got to take the bigger, longer term picture, take the emotion out of it and just look at this trend line. You know that quite clearly this is going to play a major role. That doesn't mean it's guaranteed that it's going to hit this line and come back down. There's no guarantees and certainties in charts and the stock markets. What we have is probabilities and possibilities. So the probability is, when you consider this line here, that there is a very high degree of probability that we're going to hit this line somewhere around here, around 110, 115, depending on where we get to along this line, and we're going to have a major setback. And that can only be good for Bitcoin, because then it adds structure. Just like now, people think this is a bad thing, what's happening here. I beg to differ. This correction that we're having, it may seem painful at the moment. However, what you're getting is an amazing structure whereby we're creating a stronghold of sideways movement with a nice level of pullback, which will help us to take the price much further up later on. So a little bit of pain here will give us a lot of gain over here. A quick look at the moving averages tells you a very good story exactly why what's happening now. These are the 4 moving averages on the daily chart, which are telling you a story on their own. And that is that the yellow line here is the 20 daily moving average. The white is the 50 daily moving average. The red one is the 100 daily moving average, and the green line is the 200 daily moving average. If we take a look since the bull market started back in October around here, we can see quite clearly the moving average that the price of Bitcoin has been bouncing off has been the 20 daily moving average. We've been finding support on this all the way through until here, until at this point where we fell through but found support on the 50 daily moving average. Further on, we found support again at the 20 daily moving average. And then when it got through the 20 daily moving average, we found support on the 50 daily moving average. And currently, for the first time, not only did we break the 20 daily moving average, but we've actually broken the 50 daily moving average here. And now, for the first time in this bull market, we have found support on the 100 daily moving average here. How long that will last, obviously time will tell. However, I'm not expecting the price to bounce off from this here because of what I've already said about where the 21 weekly exponential moving average is. And we're currently in the process of breaking through the 13 weekly exponential moving average. And once we close below that, then it's the 21 weekly exponential moving average that we normally find support in. But in the meanwhile, we've got the 100 daily moving average, which is actually providing a certain amount of support. And it looks to me as though it's only a matter of time before we break this level here, which is around the 49,000 mark, which is at the current price. The next chart I want to show you is the 4-hour EMA ribbons, which tell you that we are clearly in a downtrend. Once we broke through this line here, and we've come back down and found resistance along this bottom of the ribbons here, we've clearly gone into a downtrend here. And we won't be back in the uptrend unless we break well above the top of the ribbons here. So unfortunately, we've done this in the past and broke through here, but this is the first time it's gone so far down. Here we only went down a little bit, just below the 4-hour period moving average here. But the 4-hour period moving average here is so far away that the distance is now clearly telling us that the market is on its way down. And the daily EMA ribbons is clearly telling us that for the first time in this bull market, as you can see from here, We haven't fallen below the daily EMA ribbons since October last year. And again, we're breaking another record that in the last 7 months, this is the first time we've gone into the ribbons. But as long as we were within, above these ribbons, we were always in an uptrend here. But now, for the first time in 7 months, we have fallen below those ribbons. And it seems to be that we're in a little bit of a free fall. And it may well be that we find ourselves finding support on this daily period moving average, which is currently at 39,000. So it may well be that we pierce through the 21 weekly moving average and find support at this level here before wicking back up and finding support on the 21 weekly exponential moving average. Only time will tell, but these are the main indicators that we must keep an eye on. But generally, the message I'm trying to say is that the thrust of the market currently is that we are on a downward trajectory towards lower levels, anywhere below 44,000 and around that level. If people are wondering why we're having this correction, obviously I've shown you some of the resistance levels, but also in the last couple of videos, I did show you the RSI bearish divergence that was forming. As you can see here, the line was going in an upward direction. However, in the RSI, we were forming, i.e. in the opposite direction. So we had a bearish divergence, which is now playing out down here. How far we'll go, we never know the depth of the pullbacks in any correction. All we know is that there are signs that a pullback is about to come. And I showed you this in the last few videos, that not only on the daily, but if you look at the weekly as well, on the weekly chart, as you can see, the Bitcoin price going in one direction and the RSI going in the opposite direction, creating lower highs. And here in the Bitcoin price, we were creating higher highs. So again, this is now playing out with the bearish divergence. So what are the factors telling us that we may go further down apart from the ones that we've actually already had a look at? The reason why this could be a further correction is because if you look at the MACD, look at what's happening here. We're coming to a bearish cross on the MACD here. And the major times we have these crosses, if we look left, like here, we had a bearish cross and we found ourselves in a downturn. And here, we found ourselves in a big downturn there. Of course, this can turn around. This is the weekly chart. So if we do get a spurt in the price from here to the upside, then this cross may not occur. But it looks highly likely that it will cross. And then it will take the price slightly down, at least maybe a few $1,000s more, or maybe a lot more than that. Only time will tell. Like I say, we can see whether a price correction is coming, but we never know the depth of that correction. And we really don't know what this depth is going to be. We can only look at certain indicators like the 21 weekly exponential moving average and know that historically the price will find support there. The final piece of the jigsaw for me was that when you look at the ascending triangle that we had here, which I mentioned in the last couple of videos, this is usually a bullish pattern. As this is a continuation pattern, which is very bullish, then we would have expected the price to have gone to the upside here, as I mentioned in the last video, but it's done completely opposite here. What we've got is it's now fallen out of that ascending triangle. So this bullish pattern has broken to the downside. So that confirmed for me that the prices got a little bit further to go. Actually, there is one more thing that we needed to look at, and I've shown you this in the few videos in the past, that we are on our 7th candle here. So we've had 6 green candles in a row here. So we were overdue a red candle here. Only once in the history of Bitcoin since 2010 have we had more than 6 candles, and that was back about 7 or 8 years ago when we had 7 green candles in a row. So we were really overdue this correction over here. I'm sorry to say this video is very much doom and gloom this time. Although we've had a massive, fantastic run in the upward direction, and it's only a matter of time before we continue this. So a little minor correction in this direction is going to help in creating a structure to take us further up later on. So I think this is all a very, very good development that's happened. We needed the heat taken out of this market, and I think this is a very good thing that we've had a good correction for the longer term. So yes, I'm expecting the price to go further down from the current 49,000 level. But what gives me hope is if we look at the Ethereum chart against Bitcoin. This is the current Ethereum versus the Bitcoin chart on a monthly basis. Now, this chart is telling you something absolutely phenomenal. And that is, if you've done any trading like I have, one thing you'll know is that whenever we break out of a pattern like this, this is a symmetrical pattern, the point to trade this kind of pattern is that it's not when we break out here, it's actually when we get rejected. So this was the rejection candle here, this one here. And then when we come back, and we come back above the previous rejection point here. When we go above the previous rejection point, this is where you put your trade in. So if I was trading this now, if I was a betting man, look what's happened here. We got rejected at this point, and now we've broken above that point here. So all I can see is a huge Ethereum charge towards the upside against Bitcoin. Now that doesn't mean that the Ethereum price will shoot up or what have you, because it may well be that while Bitcoin goes down, Ethereum may stay at the same level, which would still make this shoot up simply because it's Ethereum versus Bitcoin in terms of relative prices. However, this is the time for Ethereum now to outperform Bitcoin. And we had our various targets in the last few videos of where we were going to go with Ethereum. The main one would be to calculate the distance between these lines here. And that would mean from this point here to this high point would be a 1,719% increase. So if we put that here, a 1,700% increase, would take us to a 0.5 level against Bitcoin. So Ethereum could be heading towards these levels in the next few months. Very, very important to have a look at this chart. So this Ethereum chart is looking extremely bullish compared to the bearish Bitcoin scenario. Only time will tell, but I hope you found value in all these little indicators. Okay, so we'll wrap it up there. Thank you once again for watching. If you found value in this video, then please do remember to like and subscribe and to turn on the notification bell. And if you want to leave any comments, questions or suggestions, please leave them in the comments below. And until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.